That's all. I'm Jeff Messer. I'm with Baker Tilly Investment Services, and I was formerly with Baker Tilly. Started in about 2006, so we had 16 years. Started an investment advisory arm that was involved when I was there with the idea of investing public fund dollars for towns, cities, counties, and schools. And we've been doing it ever since. I think that might be in banking in the trust area for a number of years. The fifth grade, and skill set. Grown our business over the last 16 years. We currently manage about $1.5 billion worth of public funds, and it's really everything. It's construction funds where the utility has a large dollar amounts of bond money that you guys just borrow, so it's kind of hanging out in the checking account right now. And what we do is we take those dollars and kind of I'll show you an example of how we might structure something like that. So we invest construction fund monies, kind of building investment ladders, and then we also invest operating money. So utilities, we invest a lot of utility money around the state. There's typically, as you build your kind of reserves over time, rather than just letting those sit in a construction fund, maybe structure those investments a little more. Not taking a lot of risk out really long, but essentially the further out you invest, the better the interest rates. In general, that's how it works. We've been in some pretty crazy times, and I thought we were headed back up again. I think we still are headed back up, but then you have geopolitical stuff going on right now. Yeah, exactly. There's a few things going on out there right now, but everything I'm reading, everything I'm hearing from my colleagues and folks in the industry, the Fed inflation is pretty much out of control right now. And they've got to find a way to tamp it down. And one way to do that is to increase interest rates. So unless something really crazy happens over Europe, I think they may very well still increase interest rates. And we already see a lot of that reflected in some of the numbers I'm about ready to show you. So how does our process work? You see the investment process. One of the things we do is we would sit down with you guys and, for instance, on the construction funds, make sure we have a pretty decent draw schedule. It's never perfect, but if we can get an idea of how you're going to spend those dollars over the course of the next 18 to 24 months, or however long your project is, and kind of lay out a month-by-month cash flow, then we can build an investment kind of portfolio around that very conservatively, make sure we have enough money to pay bills because that's very important. But trying to get a cash flow for your anticipated draws for your construction, that's the first piece. And the second is for the operating side, we're just essentially find out what your kind of core investable balance is. And the best way to describe that is if you were to kind of look at all the utility balances, all in, every dollar that you have every month, you kind of look back over the last 24 months, how low do you go? And utilities are usually pretty consistent in their balances, just kind of slowly rising over time is what we usually see, unless you have a capital expenditure. And so you guys do have quite a bit of money that you could potentially just kind of carve out and invest in a little bit more structured way to kind of, with the idea of generating more interest to kind of plug back into the budget. We are not a broker dealer. We are an investment advisor. So we charge one fee for investing your money. We don't make money on spreads or any trading or any other thing. We charge a fee based on the amount of assets that we help you guys invest. And we have two traders that are really, really good on our team that essentially do competitive bidding every time there's whenever we do look to invest your dollars, we're competitively bidding using only what you can do under the public funds code. So there's not a lot you can do. There's only 4 or 5 investments, they're very safe investments. But if you utilize the banks, the bank CD rates, you can really take advantage of some competitiveness in the banking industry and increase your yields by doing that. The other part is U.S. Treasuries are really, really valuable, and that's essentially the safest investment you can go into is U.S. Treasury. But right now, because the market is out in front of these rates have gone up. I mean, they've gone up quite a bit relative to where they were in December. And so there's a lot of value, and we've got one trader that's been doing it for 30 years, and he's top notch. He has relationships with multiple brokers, and he's looking for the best bid to get the best yield on every trade. And he does that each and every time he does his trades. So that's our desk competitively bids all your investments. Essentially what we do is we set up a day where, let's say we're going to invest your bond proceeds. And we decide we're going to kind of do an investment ladder of 10 securities. We will bid those out. We'll send a bid out. We ask for bids to come back in 24 hours. And sometime in the morning, then we get those bids in. And then we lay out, once we get the bids, we lay out all the results, send that over to you guys. And if you're okay with it, then we choose obviously the highest yielding bid. Put together essentially a letter that goes to the custodian that holds your dollars. And by the way, we use Lake City as a custodian, so their trust department is awesome. And so they would actually hold the money, and they're the ones that actually settle the trades at the direction of the town. So you guys are still involved in the trading. We do all the heavy lifting, heavy bidding, and that. But you're still involved to a certain extent in making the final decision on the trades. Go ahead.
Real quick, you're not calling us to say, hey, do you want to buy this, correct?
No, well, in advance of that, we're going to say, hey, we're going to look at CDs and we're going to take the best rate on that. So we're going to send that just to you and say, hey, in the morning, and say, here it is. Are you okay with it? It's just a matter of how we're supposed to. And then if you're okay, which should be, yes, you should be okay because.
Well, that's what, I mean, I'm in the same business you are. I've got some not public funds, but so for example, I mean, what we're sitting here saying is go out and bid for CDs, go out and bid for U.S. Treasuries, whatever you think's best, do it. I mean, we don't, because when we vote, we're going to vote do this, right? Because we're not going to be able to, come back every morning and say, hey, do you want to buy this or not? So basically, I just want to make sure that we're on the same page moving forward.
Okay. Well, that would be a clerk treasurer function as far as.
So we would give you the authorization.
Correct.
To do that.
That's correct.
We'd have to authorize Nancy to say we want rate between X and Y, and it's her authority to work with Jeff.
No, and I don't even think you want to do that because
I don't.
The problem there is if the market moves, and we
Well,
want a rate
maybe it's a no less than.
no less than we can.
Right. So we have to give her parameters. Otherwise, I don't want to put Nancy in a difficult position either, right? Like.
I don't want my head in it.
No, and we'll be frank, I mean, it's a 5-member board, and there's not one of us that can make that decision without being authorized.
Right. Well, the way I just described it is a non-discretionary. We have two levels of service, and one is non-discretionary. This is what I'm talking about right now. It's non-discretionary, where Nancy's involved only to the extent that she signs off on the trades. But it has to happen now, because once we're in the market, I mean, it can just go away like that. So we need to be able to just essentially do those trades like right away. Even banks, they don't like holding on to their rate.
And that's what worries me because, I mean, as you and I both know, when clients are said go do it, we don't want to have to call them because in seconds that can move.
And it does. It just does. So,
what's the, I mean, Nancy, and what's the regulation with this? Because I'm thinking I'm in private investment world, not public. How does that work with clerk treasurer? I mean, can we give discretionary authority to Baker Tilly Investment Services to execute trades?
Yes,
Once they
and then they just send it to me and I
Send you-
sign off on
Send you the trade execution.
Yeah.
Basically.
it. I just execute the document.
Gotcha. See, that's, it. Just in my opinion, this is one guy talking. That's what, in my opinion. we-
Term, are we looking at annualized basis? Because you talked about further down the road, but what term are we talking?
Sure, even as far as how far out we're investing.
Last page.
Yeah, if you look at, if you go to the, last couple pages,
Maybe before you get into that, should we just summarize?
Yeah, I'm sorry.
We have 5 options, really. If we have limited options that we can invest in. Can you just summarize those 5 options?
oh, sure, I'd be happy to.
Yeah.
Yep, what you said, US Treasury bills, agency securities, so like Fannie Mae, Freddie Mac, those guys.
Yeah.
CDs, certificates of deposit with Indiana financial institutions that are authorized to take public funds. And Indiana municipal securities. There's some criteria that you have to meet, so they can't have default within the last 15 years or something. I don't think anybody defaulted on a bond. I don't think anybody defaulted. I've never heard of one in Indiana, but and so we do look for those as well. Those are much harder to find. And they're also tax exempt rates, so that's sometimes a little lower. But then also you can buy repurchase agreements. We don't see many of those. That's just another form of investment that banks sell. Essentially those are it. Yeah, and that's pretty safe stuff right there. If you didn't know, Indiana has a public deposit insurance fund. So all the dollars that are currently sitting in your bank right now are insured in 2 different ways. One is FDIC insures up to $250,000. You guys have quite a bit more than $250,000 sitting in the bank right now. So is it safe just sitting there? Yes, it is. Indiana has an insurance fund that was set up back in the 80s and the banks paid a premium into. I don't know, it had somewhere between $250 and $300 million in it. Nobody's ever made a claim against it. But Indiana essentially insures every dime of your dollars that are sitting in the bank, over and above FDIC. I think there's only one other state that actually has that type of insurance. It's pretty cool. And banks, because of that, they typically are really competitive on CD rates because of that. In Indiana, you go to other states, you have to put collateral for your comp. It's real expensive to have a public fund deposit if you're in Ohio, for instance. So just to let you know that if you didn't know that your dollars are protected. And these other investments that I just mentioned, those are all, AAA rated, highest rated securities. There is market risk if you buy a 1-year security and interest rates go up, the value that goes down. But we're not trying to play the market with your money. With the idea, if you look at those little draw schedules, is to kind of match your cash flow to the investment. Have maybe a little bit more due than what you anticipate in your cash flow, so that there's a maturity coming due pretty much every month. And you have more than enough to pay your anticipated bill. And we don't have to go out in the market and sell. We can if we need to, but we try to design these things with liquidity in mind when we do it.
And is it an annual fee of 8 basis points is what we're paying you?
So,
Or is it 32 basis points?
no, it's 8.
It's 8,
So
just over a
it's
quarter.
2 every quarter. Yes,
That's awesome.
it doesn't break the bank to do that.
You mentioned term of investments. I think James asked
It's on the
about
left.
term.
Very last
Okay.
page.
So the term, if you just go to, you're talking about how far out do we invest and, are we going to invest out 5 years or something like that? Is that what you mean with respect
Yeah,
to
you
terms.
guys scheduled here 24 months, so is that what you're proposing? It's the longest term, is that?
Yeah, if you look at the illustration with the bond money, the construction funds, this is just an illustration of what if your draw schedule went out 24 months, how we might structure it. We're gonna sit down with, engineer, we're gonna make sure that we have a pretty good handle on the anticipated cash flow and expected draws before we ever invest in. Like, for instance, probably the way we would do it is, let's say in a given month, you expected on your construction dollars to have $500,000 worth of bills to be paid. We probably have $750,000 mature that month to make sure we're covered, right? Have more coming due than you actually need. And then we'll watch that over the course of 3 or 4 months, because not that yours will do this, but we've seen a lot of utility projects, they don't exactly go that fast sometimes. So we're looking to we'll work with Nancy to, hey, we probably could invest out a little bit more. We could take some of this money, invest out another 3 months or 6 months, still trying to pick up that additional interest, kind of manage it all the way through, instead of letting it sit in a money market fund or in check.
And just for clarity, I think some of the projects may go out 3 years, so we might do even a little longer than the 24 months.
Correct, but it all depends on the draws.
Kevin, I know this excites you a lot to even think about doing this, but do you have a broad idea in mind of the draws that we'll need for the money that we've got for the projects that we're going to be coming?
I know that's something we'll nail down a little bit further as we work on these latest bids that we still need to get out. So we should know in 30 days or so, but I would agree with Scott, that it's most likely a 36-month period that will be spent on things.
Part of it is what we're gonna go over when he sits down, right, it's the capital plan and the forecasted expenditure we're gonna make over the next 3 years. So are you basically proposing, if I understand you correctly, you're saying, hey, we'll come in, we hire you, you'll come in, work with Nancy, put together, and Kevin and the engineers and these guys put together a program and say, here's what we're going to do. Roughly, you'll have estimates for the interest rates and the terms and everything else, and then it can come back to us and we can basically authorize Nancy then to execute that with you guys. Is that how?
If you want to see it, typically, we don't come back to the board after this, but we can. But we don't want to miss the market. If you mean, the structure of it, like,
Yes.
hey, here's how far out, how long, yeah, we could do that. Because
I don't know that you
so-
need to come back as much as you need to put it together, get it to Nancy, she can come back and present the structure, and we can approve the structure, and then you have, and approve her to execute with you. I think that's what I would like to
Because that's
do.
why I asked Kevin that,
Yeah.
because if he needs 10 million in year one, at the end of year one, then that's a needed data set to plug into the program.
Correct.
But yeah, so as soon as Kevin gets that done, works with Nancy and gives it to you, they can produce that plan. And we can vote on it at the
Right.
next council meeting.
That would, for me,
Absolutely.
that's what I would like to see.
Can I ask a question related to that? I know you guys are supposed to ask me questions, but as far as like reinvesting, like if we see some opportunities, because we're gonna work, okay, hey, the draw schedule looks like it's changed a little bit. So we've got some money building up here because we've made these investments and it's going slower than we thought. So we want to reinvest. We don't want to let it sit idle, right? So would you anticipate coming back and doing the very same thing every time you wanted to buy just one investment?
Oh, no.
I think the
I think we're talking about here, set the stage for the overall program that you're giving us. We could even dictate, hey, we want to keep X amount in cash all the time, kind of like we've done with our budget, right? We have a reserve, and then we could say, okay, we're gonna keep this, and then any funds between this and this, we could reinvest on an ongoing basis and give you guys the authority to work with Nancy to do that. I think what we're looking for, or Dustin, I get a lot of head nods, is the structure set up, approve the structure, and then allow you and our clerk treasurer to execute it. And then we would probably want you to come back and give us an update every so often to say, here's what we're doing. here's.
And even an email to
Yeah.
Kevin and Nancy,
Yeah.
they could forward to the council that says, hey, you're not gonna actually owe this bill for another 3 months. We can take the reinvested earnings into a 3-month treasury
Yes,
and get an extra.
we would,
$8,000.
we would be connecting with Nancy anyway related to that.
Yeah.
What you just described.
Yeah, I mean, I think that's your homework.
It's all gonna be in when we need that liquidity, so.
Yeah, I
That's why
Constantly
Kevin's
changing, it's fluid, you know, it's always gonna be changing. so-
Always.
And that's why Kevin and Nancy are gonna have to work.
Yes, I think maybe that in the next, 2 to 4 weeks, we could get that program put together, bring back a resolution, here's the program, this is what we're asking for. We could do it all in one fell swoop,
Okay.
and vote on it.
Can you guys turn to this page real quick? So I really need you to see before I
Which one is that?
take off. It's the one that says resolution on it. I think
Yeah.
it's maybe the third page in.
Yeah, they're,
So, real quick, the Public Funds Code gives you a few additional ways to kind of use the tools so you can, I guess, be more, add more banks to your competitive bidding list. So what this resolution allows you to do is not only bid to local banks for CDs, which we always bid to local banks, and we want local banks to win every time. But it allows us to bid to any bank in the state of Indiana that can take public fund CDs. So because we work all over the state, we can find banks that are being really competitive and have some kind of loan program, and they need deposits. So they're bidding really good rates of return for a period of time, and we want you guys to be able to take advantage of that if possible. And we found this really helps to have this ability while we're kind of doing our competitive bids. And generally, what we do is we look at okay, we'll bid to your local banks. Then what banks are in the county? So maybe we add all the banks in the county. So then let's go to the contiguous county. Well, your contiguous county has every bank that's pretty much in the state of Indiana there almost. So there's a lot of options here locally. And again, hopefully local wins. That's what we really like. But if we can add 40, 50 basis points to or 30, 40, or whatever it is, to $1 million investment over a 1-year bid, it starts to add up, right? And it's just more money for your project at the end. So most of the folks I work with pass this, but I would recommend it.
Well, we can add, I think it's the same as what this, so maybe in our meeting later, we can add that under, clerk treasurer, under Nancy. Nancy can bring it forward at the meeting. We can then, I guess we could do it now. If we really want.
yeah.
Yeah.
Let's do it in the regular, so we can figure out which resolution number, so we have resolutions each
I
year.
think it's
Is
this.
it on there?
It's on there. Is it 2022-01? Is that the right one? But we'll do it in the regular meeting.
Yeah.
That would be, see.
What's your name again?
It's Jeff. That's what
Thank you. Nancy, do you have anything you want to add?
No, I've worked with Scott since he was young and
Long time.
here. It's a great company. And I look forward to working with, Mr. Messer and the rest of the team.
And just because I have been around for a long time, I can tell you, we worked with the town.
we used to invest your
Number of
money,
administrations ago. And,
several administrations.
so yeah, but we've got experience working with it. It went really well at the time.
It is.
Well, thank you for coming.
Thank you.
Yeah,
Thank you.
thank
Chris.
Jeff.
Have a good night.
All right, Mr. Kellner, who's up next? Mitchell's up. Mitchell, welcome.
Thanks, sir.
Good evening.
Sorry, Mitchell, go ahead, whenever you're ready, I apologize.
So Kevin had asked for Scott and I to assist with putting together the full utility budgets. And before you was, we put together, summarizing kind of a cash flow statement by the various funds for each of the different utilities. We did a lot of work last year, not only issuing the bonds, but also looking at the rates and charges for the utilities. So one of the goals here was to see what we saw coming in the horizon, but also looking back at those rate studies and the capital plans and what we had built in as an allowance there to make sure that we were on track with what was set for those rates and charges. If you want to turn to page 2, I'll start with the electric utility. So just kind of giving you a flow of these schedules. The first section is going to look at your operating receipts. The second section is going to look at operating disbursements. And then we're going to look at non-operating receipts and non-operating disbursements. And across the top is just laying out each of the various funds that are contained in each of the different utilities. So for example, in the first column there, we're looking at your operating fund, which is going to pay the majority of your operating disbursements for the electric utility. So as far as total operating receipts, we are budgeting a collection of a little over $7.5 million. And again, this is really what we were showing after doing your first phase of rate increase for the electric utility. We're projecting that you'd have that revenue of about $7.5 million. Moving down to the operating disbursements, you'll see there the total operating disbursements is just over $6.7 million. So after we take your operating receipts, deduct out those operating disbursements, we're looking at net operating receipts of $816,400. And then we have built in an interest income assumption. And again, this could fluctuate now with the market. If interest rates do go up, we can anticipate seeing a little more interest income being collected by each of the various utilities. So currently we're showing about $18,700. And then for net operating disbursements, the only item we have here is a transfer out. And that transfer out is just money going from your operating fund to your bond interest to make your debt payments. So it's really just moving money from one fund to the next to make that payment on the bond issue.
How come that's not classified as debt service?
The debt service is going to be paid out of your bond and interest fund.
Okay, but the transfers out goes into the bond and interest, and then the bond and interest is paid. Okay.
Exactly. So if you look at your bond ordinance, it designates which fund you're going to pay the money out of. So it's really just an internal moving of the money.
So that's your bond payment, the $267.
Yep. So you have both your bond payment. If you look under non-operating receipts for Fund 6302, which is the second column, you see the money coming at $222,000, and then you have a debt service reserve that needs to be funded. So you have $45,200 being moved there. So 2 different transfers that are done on a monthly basis. In total then, if you look down at the column increase, decrease in cash and cash equivalents, we're projecting for the operating fund for the electric, the total cash will go by $567,000. Currently, or at the end of the year, you have a cash balance of $1,008,796. That would leave the electric utility with just under $1.6 million in the operating fund. One thing I will point out on the second column, the bond and interest. Normally for bond and interest, you're just projecting this debt, the transfer in for the debt payment, and then the money coming down for that payment. Looking at the funds of the utility, it does look like the money for the bond issue was initially deposited into this fund. So we would recommend moving that to a construction fund once that is established. And that's something that can certainly be done while working with Jeff and the investment of that money.
That's the latest bond that we just did for you.
Correct.
Just so everyone knows.
So kind of moving on, you'll see there's not much budgeted for a lot of these funds. We don't see much activity. The last one there is we show the construction money. Currently, and not only for the electric utility, for some of the other utilities that you did the bonds, we are showing the construction disbursement based on the capital improvement schedule. Now a lot of those costs were estimates from last year. So as those costs fluctuate and Kevin gets more information, that's something that we'll certainly work with the investments to figure out that draw schedule and what we really need to see as far as money coming out. But right now, I think the budget's probably higher than maybe what's going to be spent. This is kind of a perfect world if everything got spent exactly as we anticipated it.
Where does this line up in comparison to last year? What we did this previous year, I mean, we're showing about a 10.8% gross margin, and I know we've raised our rates. We finally raised our rates, so.
Yeah, so.
Do you have that? I know you don't have that right here in this packet, but maybe you can talk about that.
Yeah, so for each of these utilities, what we did is went back and looked at that phase one that was adopted for the various utilities and made sure that your revenues and your disbursements were lining up with what was built into that rate study. And also in these budgeted files for the revenues, we are being conservative here. We're not building in any type of growth in your system, which we know you've been experiencing. So as far as budgeting revenues, we're trying to be conservative. And then with the disbursements, again, matching them up with what we budgeted in that rate study so that we know the rates that you guys just adopted are going to be sufficient to cover the budget. And you'll see, if you're looking at the,
Do you have the gross numbers though from last year?
I don't, not off the top of the head.
Do you think you could get that for us so
Yeah,
we
we
can
can
see what our increase is projected to be for this year?
Yep, yeah, we can certainly do that. You'll see though across the board for each of these utility budgets, a lot of times when you're looking at budgets, what you want to know is if your revenues are covering your disbursements, and you'll see at the bottom of each of these, other than those construction monies, which we know need to be spent down, so you're going to have a negative cash flow there. We're showing across the board that you're having these increases in cash for a lot of your various funds. So your receipts for the utilities are supporting that budget. Any questions on electric before I move on?
Yeah, I'm taking notes here. So you want to see a comparison of the budget numbers to last year actual or last year budget?
Both if you can,
Both,
if you have it,
Yeah.
that'd be great. And then maybe talk about the two funds on the bottom there you're suggesting.
Yeah, so,
Reserve of sorts, so.
yeah, what I wanted
Walk
to
through that for everyone.
yeah, so what we're showing here at the bottom, and this is what information was shown in your rate studies, is what is the minimum balances that are required for your bond ordinances. So if you're looking at an operating fund for the electric utility, what they're looking here is for you to have 2 months excluding the purchase power costs, since that's one of the largest costs for the electric utility. It fluctuates quite often. So you have 2 months of all the other operating disbursements plus 1 month of purchase power. So here you would want to have no less than $688,300 in cash in that operating fund. And we're showing at the end of this budget period of a little over 1.5 million. So you have plenty in that to meet that minimum balance. And then the depreciation fund would be 1 year's capital improvements. When we went through the capital improvement plan last year for the electric utility, over the next 5 years, you're looking to spend about $429,000. So that would be the recommended minimum. And the depreciation fund at the end of 2021 was a little over 2.3 million.
It was how much, said it again? 2.3 million?
Yeah.
The operating fund,
At the end of the year,
yeah.
it was $1,008,796. So the second to last line on each of these schedules, beginning cash and cash equivalents, that's straight from the treasurer's report. That's going to show your cash starting point for the year.
So where do we put the excess? Obviously, we have excess going forward, so this is budgetary. I get it, and that's required.
Yep.
So what do we do with the excess?
In your operating account, if you have excess,
Yeah.
you can always move that excess money. Some places, and per your bond ordinance, you should have that 2 months. So some places will move that to the depreciation, and if the operating balance falls below, they'll make that transfer back.
Okay. little way over, that's what I'm saying.
That's where Jeff comes in play. Right, I mean, that's the
Well,
reality.
yeah, and those represent core balances that could be invested over a longer period of time.
So we just need to make sure we have that required, maybe a little bit more, and then invest the rest of the interest back in.
Yeah, and that's one thing to remember, that's really just a minimum balance, so it's, you're starting point. Well, looking like you're in trouble if you're going below that balance, it's not uncommon to have more than that if possible, but again, that is with the ability to invest in those monies, that's something you could do as well.
What's our biggest factors? Purchasing power, could that fluctuate quite a bit?
Yeah, that
Is
fluctuates
pass
quite
that
often.
on, though.
Yeah, that,
Could pass it on,
we
but
pass that on quarterly.
would we see a lag on that at all?
You do, yeah, there's a 2-quarter lag on
2-quarter lag,
that's how that,
that
it's
would be why
reconciled.
you want to keep more. Yeah.
Do you have a capital plan? I know you said a dollar amount, we were expecting to spend 429, but I know maybe I didn't get it.
I don't have it in here. Can you pull up the capital improvement file that was included?
and fights the top here.
Which, are we still on electric?
Electric.
I hear a walk on that coming.
Wouldn't be right if it was.
Versus black and white. That's an extra page.
Oh,
Thank you.
So this was the capital plan that we used last year for the rate study. If you recall, we did a bond issue for about $2.4 million of this capital plan. So that brings down that average annual capital improvements. Right there, it's showing us 760,000. Once you factor in those bond funds, it brought it down to 429,000. And part of the reason for doing that was bringing the rates down, by bonding a portion of those projects, we were able to bring the rates down by not including 760,000 in the annual cash, but having the 469,000.
what's the total spend over this time frame?
Total spend for, are you just talking about collections, or are you talking all the way through?
All the way through 28, can you sum that for me?
I don't have that.
Oh, I thought you guys had.
I had a
it. Yeah, I was like,
model.
yeah. It's what, 3.6 plus 2.4, so it's roughly $6 million.
That's cheap, and you're gonna get.
Give you this down right here.
7.6. So it's double. Okay. Yeah. Kevin, has anything changed? I know we put this together previously. Is there anything that you want to talk about on the capital plan?
Yeah, so for electric, the biggest change is we missed our mark a little bit on the estimation for the streetlight project on Baldwin Street. So we increased that line item, which is on council tonight. We so choose to move forward, so that one went up quite a bit.
So it's now at 700 or it's going up from there?
It's now at 700.
Okay.
Well, that's got some cushion in it. I think what you have tonight is
600,
But what was it previously?
well,
Like it was like
Mine
four,
is
it was 4 something, right?
I was less than that, but that was a guess for me. That was before we got an engineer involved and let's realize the full scope of the project. So my number was probably not the best for myself to go off of. So when bids came in, I was like, whoa, way off. But yeah, the engineer estimate was at was it 60 or 70,000?
Right. I mean, are there any other items that, I mean, costs are going up?
Right.
We're dealing with unprecedented inflation. So do we need to adjust some things based on that? we need to
Well-
reserve a little bit more? Do we need to not be as aggressive with Jeff in the electric utility? Because, I mean, especially these items, pole upgrades, regulators, meters, these things are not gonna get cheaper.
Right. So the absolute is, as far as the meters, right, we're almost done with that project, so those funds have been almost exhausted or spent. And then, the Baldwin Street project, the other items that are listed for 2022, line upgrades, voltage regulators. Just for example, voltage regulators is not 100%, so that was a, just in case, more of a placeholder. So we have some projects within this year that we could probably push or not spend as much. So I think we've got room if we get in a situation where things continue to get more expensive and run over. We have not engaged on any of the line upgrades. We've not even engaged an engineer firm yet for that. So I think we've got room for 2022 for sure.
So like in 2021, you were spending 1.4. Did we spend anywhere near that other than what did we do anything on other improvements?
We spent probably 800,000 on the knee replacement project. We did not spend any of the street lamp upgrades or LED street lamps. We would like to start on some of that this year, but
Some of that will move
push out.
in between your conservative budgeting and your other improvements is your contingency, is what I'll call it. You feel like you have enough room.
Mhm.
So when we have the conversation about investing the difference,
Right.
that's just all, that's what I'm concerned about. I mean, everything looks good. We bonded. I feel good that we did that bond. We got a great rate. I feel like we're getting our arms around the electric utility, making sure we're charging the appropriate rate. That will help our revenues, but we need to make sure we're getting service and we're not continue to add, do these items. In my opinion.
I think we bonded at a good time, we're investing in a good time. I just think it's almost, because treasury is going up, and it worked out better that way.
And not only that, you're starting in a good spot. I mean, you've got a good amount of cash on hand already. The rates that you just adopted are gonna continue to generate cash to pay for that design over that plan over the next few years. So, you should, as long as you kind of just plan that out carefully and don't do everything all at once, you should be in great shape.
I'm just curious, what's the lead time, because everything was so backed up on those street lights?
12 weeks when we place the order.
12 weeks.
Now, maybe things have gotten better, but not likely. So if
So
anything,
we
they
have
got worse.
placed the order, and we have to talk about that.
Yes, if we approve the bid tonight, then tomorrow we cut a PO. We are putting in some temporary lighting on South Baldwin, because we realize it's gonna be a while. So we've got a work order after that. I think we're fine on this side, but it is dark on the south part. So we've got 2 locations we're gonna have temporary streetlights.
Once it's approved and started, any idea of the timeline on it?
I'm not sure with the contractor on their schedule. I'm hoping, if nothing else, they can place the order for the light fixtures ASAP. And I'll start the clock on 12 weeks. And then in between, they can start working on the foundations for the poles and so forth.
Yeah.
So, certainly summertime.
Yeah,
Hopefully.
hopefully.
All we can do is place the order and get the. What do you think the lesson learned there is for us going forward?
I would say maybe engage with an engineer sooner. I guess part of the project, obviously, we were doing the street project and water improvements and sewer improvements, and I didn't realize the scope, I guess, of the infrastructure needed for these light posts, bases and all that. So, going forward on the next one, if we do further decorative lights, then we'll make sure we'll engage with an engineer sooner.
If we look at Cat Park or other projects, we probably need to be ordering lights.
Yeah, and what's
Like the
different?
second we approve the project,
Yeah.
you know, get an engineer involved right away. Well, I mean, or get an engineer involved right away.
Are we design, on this walking trail, are we gonna kind of mimic a little bit like they are down, I know they're more expensive. But,
Probably not.
I don't think-
just some kind of light
I
on
don't think we're.
I don't think so.
it. Yeah.
One thing to keep in mind is this one was unique because it's the electric utility, managing and doing the street light lamps. When you get into outside of our electric utility, now you're dealing with, say for example, our EMC. So they're gonna say you can choose this one or this one. If you wanna go outside of that, now you're basically on your own and you will own them and maintain them and repair them. But be on a private system, if you will, where like Franklin, all those lights are on meters and they're Duke's like, there's yours now, so.
There's different programs. Anything else on the utility, on the electric utility?
Now we can move to page 3, that's gonna have the sewage works. So again, similar to electric and water, sewage works, we did a bond issue, a little over $7 million on that bond issue. We also did a 2-phase rate increase, with the first phase effective January 1. Starting in the operating fund, we are showing total operating receipts of $3,217,800. Working off the operating disbursements used in the rate study, and also we built in a couple of allowances, increasing fuel costs, knowing that fuel prices are going up, and it does appear that the sewer looks like the sewer work will be adding a couple of vehicles later this year, so we're going to bump up the fuel costs. Salaries and wages, we did make a small increase for an allowance for summer interns, assuming about 14 weeks working there. The split there was 30% would be coming from the sewage works and 70% from the water utility. After making those adjustments, operating disbursements, we're showing a budget of $1,695,000. That's going to leave net operating receipts of $1,522,800. We do show non-operating receipts of just under $200,000. And then under non-operating disbursements, we have those lease payments built in. To be conservative, assume 6 months of payments on those leases. Talking with Kevin, it appeared those would be delivered at the end of the summer, so using 6 months seems like a conservative number there for the budget. The transfer out again, you're gonna have your transfers to pay both your debt service and to fund up the debt service reserve. And then we also have an allowance here for $250,000. Kevin, you probably have more details on that, but was that a legal settlement? Yes. So we've included that there as well. So for the operating fund, for this budget period, we're showing an increase in cash of just under $265,000. The beginning cash for 2022 was $1,731,582, leaving your ending cash in the operating fund of just under $2 million. Moving down to the bottom of the page, then looking at those minimum balances, you can see here for your operating fund, the minimum balance would be $282,500. So at the end of 2022, we're projecting to have a surplus of about $1.7 million there. Moving on to the fourth column, your depreciation fund. Right now, what we've done for the depreciation fund is based on the capital improvements page that Kevin just handed out. We've used each of the items here that will be funded with cash. And this might be easier if I do it. So each of these items I've been highlighting green for 2022, that's what we're showing an allowance for out of your depreciation fund. So that's 1,119,000. Also in the depreciation fund, you'll see there's a transfer in of 1,172,000. Last year, the depreciation fund paid for a project prior to receiving those bond funds, so that's just gonna be a reimbursement in the depreciation fund. I believe that was for your I-69 project. Should be this one right here.
Bond.
Yeah.
All the orange are bond. That's where you lost with the printer. That's right.
So the light and dark gray.
That's 9590. Is that part of those reimbursements? 122 operating,
Which,
non-operating receipts, you got reimbursements. Is that part of it? I might have missed it when you said that. I can't see.
on the reimbursements for the 95,900, I'll have to look at what that allowance was for.
Okay. And I assume the rent, was that like a share? Kevin, was it rent on that like a share, or was that actually like rental of equipment? Or rent, share? Sure.
I need to look at that one.
Might be, there's a town hall there.
Okay, so it's a share rent, okay. I didn't know if you broke that down into sewer, electric, water. Is it just all
So, yeah,
shares? Is that what we're still doing?
yes.
Okay.
So for the depreciation fund, after that reimbursement from the construction money is made, right now we're showing an increase in cash of about $54,000. At the beginning of the year, the cash balance was just over $5 million. So leaving you with $5,071,146. Then looking at what we built into the rates and charges, looking at the annual capital improvements, we had an allowance of $612,700 as your minimum balance. So again, you do have quite a few funds you can invest there as well from your depreciation fund. On your construction fund, similar to what you'll see with sewer and water, based on this capital improvement schedule, right now we're assuming everything will be spent in a perfect world on track, no delays. So we're showing right now, you would be spending that construction money down to 1.7 million by the end of 2022. So this is where it'll be important for us to work with both Kevin and then Jeff to make sure that when these projects are coming online, that they're on track to invest that money and making sure that you have that money to make those payments to the contractors.
How much were the bonds total that we just did?
7,625,000, I believe was the number.
How much cents?
0 cents.
Oh, is it 5,000?
He knows it, trust me, he probably did all the documents, he knows it. Yeah,
They won't let us do it.
and that was, yeah, okay.
Is any of the I-69 reimbursable to some of these line items, or is that after everything?
That was your payment, your one-time payment, right, for the I-69 project.
Is
So
that,
that was paid at the end of last year, and that would be reimbursed from the construction money, since we didn't build that into the bond issue.
so you build it in anyway?
Yeah.
Gotcha, okay.
That's that one. So we'll have 6.5 in bond dollars available going forward. Is that a relatively fair statement?
Yes. And right now, we're budgeting about 5 million to be spent this year. So again, like we saw in the electric utility, if you're looking at each of the different funds here, the decrease in cash is seeing a build of cash still. And that's
again, being conservative with no growth in revenues for your customer base, or your customer base.
So conservatively, Kevin, what do you think, what kind of growth rate do you think we'll have in your estimation, in terms of all the calls you get and all the folks that work? I mean, what would be good actually is when you do look at the 21 versus the 22, if we could get the numbers and then look at what we did in 21 versus 20, to then say, okay, here's the growth we had the previous 12 months, and things continue on this path. We would see this, not that we want to budget that way, but then we would know.
The plus we have budget or a rate increase to move that higher.
Right, so it would be good to know and just have an understanding of what that would be. And then that might also help us to think through, you know, the future capital expenditure plan.
Any questions on the budget or the capital fund?
So page 4 then is gonna have stormwater and utility.
Yeah, you can't see. Oh, so there. Stormwater. You want to do this one last?
You can, yes.
Yeah.
Not much has changed with the stormwater, we didn't do rates last year. The only thing, we did do the refunding bond to shorten those bonds. So that was really, stormwater is pretty much status quo for the last 5 years.
Yeah, let's move on to water for time.
Yep, we can certainly do that. So page 5 has the water and utility, again, focusing on the first column there for the operating fund. We're projecting operating receipts, including the phase 1 of the increase in the water rates, $9.4 million. Total operating disbursements, we're showing just over 5.8 million. And again, we did make some adjustments here. Again, salaries and wages has the, not only the additional employees from the rate study, but we also built in the allowance for an intern or 2 interns. Then also looking at chemical costs, we have increased the chemical costs. Talking with Kevin, it appears that chemical costs, like everything else, have been rising in cost. So we did bump that up to 900,000.
61% increase.
61% on chemical.
Now I did find out that it's not, market driven, so that's not set in stone for the rest of the year or operating period, but right now.
Where are we buying it from?
Vulcan Marine.
The small.
Vulcan materials or chemicals come from a company by the name of Brent Tag.
Where are they located? You know
Uh,
where they source it from? Is it the same issue that we're seeing in some other, like, is it from the Texas area when they have the petrochemical issues on that, or do we go, if we try to source it from somewhere else?
We are looking-
Pervasive throughout the whole
Right.
industry.
We are looking into other suppliers, but traditionally, when we bid these out before, Brent Tag is usually a vendor that wins. Yeah, they're out of they have a few locations out of the state. I'm not sure where the actual, so it's caustic soda, chlorine.
Yeah, I thought that was demand driven.
Yeah,
Supply chain.
transportation costs.
Yeah, everything's up.
Fluoride.
Oh, I was looking at commodities today, steel has gone up dramatically overnight. ridiculously, so everything's gonna be.
Did you see nickel today?
I didn't see nickel.
Nickel exploded.
Did it? Steel is, off the roof now. Yeah, we're gonna start seeing all
And that was straight on.
Yeah.
Yeah, it was like this. You know, and just, it's not up and to the right.
There's some things you can't even get a price for. You just order it and they tell you what it'll be when you get it. So let's hope that we don't have that. We don't have that. Chemicals. Running in the other items.
So we build an allowance there for the chemical increases. Net operating receipts were showing $3,594,400.
We did fuel too.
Fuel as well, so both sewer and water we increased fuel for not only additional trucks, but then just the price of fuel going up.
Is that in materials and supplies? Is that where you put that in?
Yes,
The fuel, okay.
yes, that would be in materials and supplies. For non-operating receipts, we're showing a little over 380,000, including tap fees, interest income, and then reoccurring miscellaneous items. For non-operating disbursements, the transfers out for your bond payments and your debt service reserve funding, we show a payment load tax of 55,000. Lease payments on the additional vehicles, including down payments of $36,300. And then a allowance for capital improvements here of about 400,000. With all of those items included, we're still showing an increase in cash for the operating fund of a little over $1.2 million. The beginning cash was about 3.6 million. So after this budget period, we're showing ending cash of about $4.9 million. And then at the bottom there, if you're looking at your minimum required balance, 2 months of operating would be $967,000. Next one I'll look at is the depreciation fund. Again, similar to what we saw in the sewer, you did have a payment made prior to the bonds being issued that we're showing being reimbursed. That is the transfer in of $1.2 million. Currently, for the capital improvements from the schedule that Kevin handed out, items highlighted in green, we're showing $3,210,000 being spent in the depreciation fund. This would bring down depreciation cash by about $2 million. Your beginning depreciation cash balance was 7.6 million, leaving you in the depreciation fund, leaving you with a balance of $5.6 million. And then looking at the construction, you received, so if you recall, the water bonds that were issued were larger than that 18 million. A portion of that was to pay off the prior bond issue. So bond proceeds received for both cost of issuance and construction were just under 19 million. We are showing that transfer out for the funds already paid last year, the depreciation fund of 1.2 million. Cost of issuance were 167,000. And then we're showing capital improvements paid from those construction proceeds of $8,080,000. This would leave your construction fund at the end of the year at about 9.5 million. Any questions on that budget?
So as we go to the color-coded capital plan, the green is bonds or the green is depreciation?
The green would be your money coming out of the depreciation.
Okay, so green is depreciation and the orange, it could be colored bond, I think it's orange, is the bond.
Correct.
Okay.
Steel prices are going to hurt us on this water tower project. And then, we're already estimating it's gonna cost $1 million. And that was before what happened today, apparently. So we're getting nervous about looking at this and coming up with a new project.
And we ordered it and we,
It's close to going out for bid. We just got IDM approval, so we're actively working on the bid documents to get it out ASAP.
kind of bid process are we using? Is there a way for us to work directly with, or to try and utilize someone to bid this deal right away to get in line? So what's going on is, all the steel producers like that I work with, you tell them, okay, I want it, they'll lock you today, and they'll tell you 24 to 40 weeks from now, yeah, we'll give it to you at that price. So we might need to get with David, and we'll try and work on a way to come up with a plan so that if these things continue to skyrocket, at least we have the steel portion of it locked in, because there's a lot of
Portion of the project.
yeah.
$1 million every night.
Because you can always, if it comes back down, you can always cancel and reorder. It depends on who the provider is. So if we're doing a bid process where we're getting a general contractor to do it all, we might want to break that out and see if we can have someone, we can bid the steel separately.
Yeah, we can look into that.
Okay.
We can hire a futures trader for the projects we gotta do. Jeez.
Yeah, it's really,
We're just at the tip of it.
We thought the police department was gonna, it's nothing, compared to what's doing
Until you said steel, I forgot the tower we have
The other challenge may be contractors too, and having enough people to actually do the work.
that's a pittance compared to what's going on in the commodity.
Trying to further escalate overseas.
And some of our mains, we need to probably think about ordering that pipe sooner rather than later. I've been hearing about shortages.
Yeah, we actually authorized a different type of material today on our Saddleback Road project, where we're able to get quantities of pipe that's a little bit smaller on the ID, and of course, give them a day, get that ASAP, so, it's helping that. They're allowed to bid, plastic, ductile, pretty much have a range of different materials, cheap.
Bad thing is if they bring it in by rail, if the transportation's up for a time, everything, it's a domino effect, it just keeps going up.
So, from my perspective, Ken, I think the biggest thing that I'd like to do is to really go over the capital plans. I don't know if we want to do another joint meeting, we want to do it via email or figure out a way to go through this. I think everyone probably needs to go through these, ask questions and be confident with it. I think in terms of the numbers we just went through, I don't have any other questions on that. And all of my questions are around the capital projects and improvements.
Right, and we're kind of locked in on some of these projects with the bonds, and try to give them a rest of the project with the bonds or funds.
So everything that's been marked as a bond, that is, we're doing it. Except, well, not on the sewer stuff, there's some stuff that's beyond what we bonded. So I think that's future. Maybe you could go back and clarify that maybe you have an intention like, hey, we're gonna need to bond that. Like, I know there's one particular item I know it's a future bond. So maybe you could clarify that for everyone. That would be helpful.
Same for water as well, because if you're looking at the schedule up here, you have projects out farther than that 3-year period. So we have contemplated you come back in 2-3 years and look at this again and see where you're at as far as the projects you were going to do and then what projects you still have coming up that need to get completed.
Yeah, because if you sum all the expenses, you go down, cheat like you did before, yeah. You're looking at $60 million, right? And we only bonded less than 19, and we only have 5.6 in our depreciation fund. So,
Plus you have an annual allowance in your rates and charges to generate money for a lot of these green projects. So we had an allowance, I want to say about $1.2 million annually for your capital improvements from cash.
okay.
So if you're looking at 10 years, you're looking at about $11, $12 million.
from that alone. So that gets us about halfway there.
Still a big gap.
Yeah, I mean, we're gonna have to do more bonds and
Yeah, the expectation was to come back in 25.
and do another series of bonds.
What interest rates are what?
8%.
What's our next Jeff can invest this in all the. What's the treasury that's high? We get a Nancy, we'll have all the money ready.
Yeah, there you go. We'll actually be able to use the interest from that to pay.
Yeah, there you go.
interest.
There you go.
I can't bake, but if you guys can make pies, I'll be happy.
I can bake.
I'll sell one.
Is it okay if Lori loads the operating budget for this year? Or do you want to come back and go over operating related expenses? So right now, utilities has a zero budget, right, Lori? I think we did this last year where we did the operating budget, but nothing in capital. So we're not to do that again, but she needs to get something loaded in the system. So I didn't know if we want to come back and go over the really detailed part of the budget, which is all the sub accounts of everything, or if you feel comfortable with what's been presented from an operating standpoint, then we can talk more about capital stuff. And I think you can go on after the fact about capital budgets.
Yeah.
Yeah, I'd like to see the comparison.
Okay.
So I don't mind her load, I mean, once she loads it, it's not like what we do with our budget, right? It's not submitted to the state, it's a completely different animal. So I mean, I would say to go ahead and load it, and then if we need to make adjustments based on seeing those comparisons and capital stuff, then we need to do that. And that's okay with the clerk treasurer's office and how.
Works fine.
Okay. Does that work for everybody? All right.
She's probably loading it as we talk.
So we'll do that by.
Yes.
Figure out.
Okay.
Mitchell will send.
Okay.
And we'll get the comparison circulated by as well.
Thank you.
How would you like to proceed further on the capital stuff? Meeting, another meeting like this, or email as mentioned, or?
I like it all kind of easy. Let's do that.
Today, like before our admin meeting, or?
Can we just do it in an admin meeting?
I would say to do it before the next one, but
Okay.
I will not be here.
That's,
I'm pretty sure I'll be
Later.
not cohesive. Oh, it's gonna.
No, that's good.
I'll take you and put something like that together.
I don't know, not,
A meeting or?
The information, capital projects.
I mean, I pretty much have what I need on capital stuff, so
I think it's
work on
just,
this every day.
I think it's just clarifying the stuff that's included in the existing bond versus what will be future bonded. And then it's just asking, us having the opportunity to ask questions. I don't think it's a marathon session, in my opinion.
We do it either way if you want to do another meeting, Zoom meeting, whatever you guys.
So maybe after the night meeting, we can look at our calendar, we have a good day. In that schedule.
Yeah. Thank you, John. Appreciate it. I'll accept motions to close the special meeting.
Move to adjourn?
Second.